Yes, welcome back to my channel. In today's video, we're diving into trades I took, profits, technical analysis, strategy and strategy development, funded payouts and funding strategy. So if you've been struggling with your trading, with finding the right strategy, with finding the right concepts, if you've been struggling with getting funded or payouts and strategies around funding, this is the video for you. Let's get started. So I want to start by explaining two trades, and this is trade number one. It's a gold trade, and I'm going to explain exactly what I look for, how I use technical analysis. So this is the first one, and what I trade is accumulation and distribution patterns, but in a very mechanical way. Now I'm not going to give you all the exact mechanical rules I use, but I'm gonna give you exactly what I look for, so you can implement it in your trading as well. So let's take a look at the first one. So this is a clear trading range, everyone can see it. And the way I trade trading range is actually really simple. So I had a long at this level, the blue line, and my stop loss was below that one, below that candle. And my target was somewhere up here. So what I did is, what I always do when it comes to ranges is I wait for a range. I want to see a false breakout to one side and then a real breakout to the other side. And I have very specific rules of what I use, what I define as a real breakout or what is a false breakout. So let's take a look at this example. So we have a trading range forming, and as you can see at that point, this is the low of the range. This is where the low of the range breaks, but as soon as it breaks, we move up. That's already a sign that something is up there. Someone is buying as soon as a low breaks, and that's a good sign. So then we move up, we come back, we break that low again, and we quickly move up and break to the other side, close above there and stay above there for multiple hours. Now that's exactly what I'm looking for. So I see a trading range, I see a false breakout to the downside, and then to the other side I see a real breakout, which I have specific rules for, and we see acceptance there. In other words, as you can see here, it breaks the high of that range, it comes all the way back, but then it comes back above and it closes above that important high. It stays above there, it retests for an hour, stays above there and there and there. And as you can see, it's completely different behavior to what you see on the low end of the range. So as soon as the low end of the range broke, you can see that price quickly moved back up, like within the hour. Same thing here, price broke this low, quickly moved back up within the hour. In this case, we stay there. We stay above the level, we stay above the level, we stay above the level. So we have acceptance there. So we have rejection of new lows and we have acceptance of new highs. And those are the two things I implement in my trading strategy. And then I buy a retest of the trading range, put my stop below there, and I'm looking for this extension up. I'm not looking for this entire move, so I already am out of this trade. That's not the way I trade. I just want to get in on a retest, play for the next leg up and get out. And if I get a new trade on, it's fine, but that's how I do it. So this is what I look for on the long side. Now, what you are going to see is that if I'm shorting, which was the case here, it's basically the exact same thing, but in the opposite direction. And that's what you want. If you're trading and you have one simple strategy or a framework that you use when you're trading, they should all be quite similar. So all the trades you take, if you put them together, print screens of it, they should look quite similar. Because if it's not the case, then you're probably not consistent enough in your approach or your strategy isn't clear enough. So that's really important. So what do we have here? My stop loss was this upper blue line and my sell limit in this case was this level, very clear level. Now, I actually didn't get filled on this trade. So it did retest, it missed it by a few pipettes and then went down. And I was playing for this move, looking somewhere to take profit in that area, but it went without me. But why do I trade this? Essentially what we can see is that every time we make a new high, we get a quick rejection. So let's take a look at this one, for example. You can see this is a decent swing high within that range. We break that high and we immediately come back. Then this becomes the next significant high. What do? We break that high and we aggressively move back. Now we also have a clear supply zone here. I don't really use that yet in my trading. I am building a strategy around that, but that's also extra confluence since this is a very clear supply zone. So all in all, we have this trading range, and every time a new high is being created, we don't get acceptance, we get rejection there. that tells me something. So when this happens and we come back below that high, people that bought that breakout are now trapped. And as you can see, they need to get out of the position, which causes aggressive moves. Now on the low end of the range, which is this blue line, you often have stops waiting as well. But as you can see, as soon as we break the low of the range, we stay there for hours and hours and hours, and we move lower, or we have acceptance. So we have a false breakout of the highs, we move there, quickly come back here, and then we have a real breakout on the low end. What I'm trying to do is sell a retest of that breakout to play for the next leg. And that's exactly what I did in gold, but in the opposite direction. So hopefully you can see that what I do is often very, very similar. And it's very mechanical. Now you might be like, why do you classify this as a false breakout? We've been there up for a few hours. And that comes back to the exact rules I use, which I'm not going to discuss here. But when you're trading like this, yes, you do need clear rules. What's a false breakout? What's a real breakout? Define that for yourself. That's really, really important. So hopefully you learned something from this. Now let's dive into funding, because what happens if you can trade, you learn the concepts, you build a strategy, then you want to get an income from trading. How can you do that? Nowadays it's quite easy with these funding companies. So let's go to my dashboard in one of my funded accounts. So this is Next Step Funded. It's just one of the prop firms I use and have been using. Got 350k accounts with them. I also have another account with other prop firm and another account with that prop firm. I like to diversify, as we all know, with MFF. If you're only funded with MFF and you had 400k there, next day they're gone, your income is gone. I like to diversify there, so I have multiple accounts. I trade them slightly differently to get more consistent payouts. So as you can see, this one account is and has been in a drawdown for quite some time right now, which is fine. It's just one of my many funded accounts. But then we go to the next one, which is this one. And this one is up to 2k, a bit more, 2k 200. And this one is ready for a payout, so I'm going to get a payout on it soon. Next funded account, this one is up, I believe, around 1000. And this one is also almost ready for a payout. Now, why am I showing you this? I want to give you some tips regarding funding. And the most important thing when it comes to funding is going to be getting consistent payouts. It's not going to be, building a slow long-term equity curve with one prop firm, because as we've seen, one prop firm might be gone tomorrow. So your goal with prop firm is different from when you're trading your own money. It is getting payouts and getting good payouts. That's the goal. How can you do this? How can you accomplish this? By having multiple funded accounts with multiple prop firms, starting them at different time intervals. So let's say, for example, the first account I showed you has been in a drawdown. If I only traded one strategy and one funded account, I couldn't get any payouts. If you have multiple strategies or multiple ways of trading it, and you have multiple funded accounts that you start at different time intervals, you can get a payout there, because that while one account is recovering, the other one is now in profits and you can get a payout. So what I'm trying to say is, when you're a profitable trader, when you have a strategy that works, try to get multiple funded accounts with multiple companies, start these funded accounts in different intervals and trade them slightly different. So I have one account where I take all my trades. I have one account where I do discretionary trading. I have one account where I only take grade A trades. I have another account where I trade a combination. And because I do these things, I will have different equity curves. And one is going to be ready for a payout, the other one isn't. And that way I can get a consistent payout stream, which is what you want if you're trading with funded accounts. So hopefully you learned something from that. Another thing I want to add is that a lot of people just risk way too much on funded accounts. They just swing for the fences every single day, hoping for that big home run. Be a bit more relaxed about it, guys. Like, yes, you need to risk a decent amount because you want to get payouts, so you're not building that slow long-term equity curve, but you also don't want to blow up every single week. So there's a balance there, and based on your strategy, decide how much you risk per position. On most of these trades, I risk around 0.33%, and that's with a 12% maximum drawdown. On other accounts, such as my grade A account, risk a bit more. Again, you need to be very systematic about these things. So another thing I want to add is, for example, with this trading account, as you can see, this one also had been in a drawdown for quite some time. And then it moved up and then it was stagnant. I hadn't had a position for quite some time, but then a few big winners. And that's really important to think about as well. Like, be very patient, guys. It can be that you are in drawdown for months, and that's fine. You know, my win rate was 41% on this. Totally fine. I have been in a drawdown for months in a row, and then you get your payout. So be realistic, be very patient. Like I said, have multiple accounts, and then you should be able to get multiple payouts with your funded accounts. Now, also on social media, a lot of people are bragging about, you know, getting this paid out, getting that paid out, 20k payout there. You have to realize that most of them blow 3 or 4 accounts, then have one big winning account where they get a payout from. So also keep that in mind. Be very realistic about it. Build a solid plan, and that's how you get funded and how you get payout. So thank you for watching. Hope you learned something from the trades I shared and the strategy I use for getting funded and getting payouts. Subscribe if you haven't already, and then see you next time.